Well, to tell us a little bit more about what's been making headlines in finance and economic news as well this week, we are joined in the studio by Suzanne Haddan, who is the Managing Director at BFG Financial Services. Suzanne, always great to see you in the studio. Thank you so much for coming in. Let's talk RBA. Let's talk Governor Phil Lowe. Now, he has signalled that the coronavirus will have a short-term impact on the Australian economy, but it is climate change that inevitably will have a longer-term impact on the economy. Did you have any suggestions as to how to mitigate this?
Well, he certainly confirmed what we all knew, that it's going to be profound and it's going to be growing. And his particular concerns were about policy settings, that business is looking for policy settings so we can take advantage of some of what he calls fantastic opportunities in renewables. And the issue is with the climate changing is it's having a profound effect on our GDP and our economic outlook. And what's happened is the bushfires, the droughts, that's expected to have a negative impact of 0.45% just this year alone. Makes it very hard to reach our 3% target. But also consumers, they are getting very concerned because what's happening is those insurance costs have to be covered. Now, initially, the insurance companies have the money and have reinsured some of our risk, but eventually they'll want to recoup that from where? Premiums. And we will all be the ones who pay that. And once again, consumers will shut their wallets, which concerns the RBA.
On the coronavirus, or COVID-19 as they're calling it now, it's going to be hitting sectors, or it already is hitting sectors like education, tourism and business as well. And now with that travel ban extended and that uncertainty for business about how long this will last, but also how serious it could get, that's creating real uncertainty for businesses.
Absolutely. So we can't quantify the effect on the GDP at the moment, but what we know is it's going to be a pretty big number for the March quarter, because until the virus is contained and we know what's going to happen there. But think about the tourism. China is our major source of tourists. That's just crashed. As far as education, those students pay full fees. And so we're not talking hundreds of millions of dollars, we're talking billions of dollars depending on how long bans and what has to happen last.
And it's often the case that those higher fees almost subsidise the lower fees that local Australian students are paying.
Right. There's such a business case, isn't there? So there is major concerns. There are some positives in the sense of the Chinese government is easing access to credit for their population to borrow and is stimulating their economy by infrastructure projects, which hopefully will benefit us. As a side issue, I think it's also focusing Australia about diversification, in the sense your own investment portfolios, you wouldn't want one investment to make up 30% or more, but that's what's happened to the Australian economy in relation to China.
That's the whole thing about don't put your eggs in one basket,
Oh,
isn't it?
I love that
absolutely,
too.
right?
That's a good one. Everybody should remember it.
Now let's move on to something that I read this week, which was quite staggering. These staggering numbers from the Australian Bureau of Statistics that showed that there's a major disparity between older homeowners and renters as well. So why is that the case?
So what's happening in all age groups between 2011, 2016, we're having reduced home ownership, particularly the young people, but also the over 65s. And when you retire, it's actually predicated, all our policies, that you own your own home. For example, if you're on the age pension and you don't have a home and have to rent, you only get an extra $3,500 a year to help with that. So also you're allowed to have some additional capital invested, up to $210,000 more than homeowners. But if you have all that extra capital, you probably would have bought a home in the first place. So to me, as far as the home ownership issue, it's very much about what policy settings we need to protect the renters, but also what policy settings we need, and we have some, to encourage more and more people in earlier in their life.
Because once that gap is established, it compounds over time, because the person with a property, they're repaying their mortgage, but in doing that, they're building up that asset. Whereas renters are paying what often you call dead money, because it's not building up over time. It doesn't become an asset for you.
There's occasional places that renting is beneficial, but I think it's been proven over the long term. Home ownership gives you security of tenure. I mean, you can't be asked to leave. And it actually gives you an asset to bounce off. And I think you need a lot more discipline when you don't have a mortgage, because mathematically it says if you don't pay the mortgage, invest the money you would have put in the mortgage. But people don't do that. It's an extra trip, or they enjoy that money. Mortgages are disciplined as well, I think.
Yeah. Just on that point itself, we're now starting to see older Australians apply for their first home loans as well, isn't it?
That was a surprise.
Yeah.
Remember that new scheme, the First Home Deposit Scheme, came in 1st of January this year, only for 10,000 people, but still, every little bit helps.
Yeah.
But 11% of the applicants have been over 40.
Yeah.
And that was a surprise. Still the biggest group, 55% I think it was the under 29s. And it was interesting, it's doing what it was supposed to do in that it's encouraging lower income earners, singles about $67,000 in income, couples $110,000 to get into the property market. And in Sydney, the average price they paid was $570,000. Which is well below the limit, and so it's doing its job.
Yeah, interesting. Suzanne, thanks very much for coming in.
Thank you,
Thanks for having
Suzanne.
me.
See you.